And so in that, where do you think crypto assets sit in a traditional capital allocator's portfolio?
Yeah.
How are they thinking about that right now?
Yeah, so I just put out some content around this, and hopefully in the next few days we'll push out a longer report with a lot of great data in it. So look, if we look at this institutional investor class, there's about in the U.S. there's about $28 trillion of institutional AUM, and that's mostly pensions, but that's endowments, family offices, hedge funds, venture funds, PE firms. Crypto market cap is 220, 250 billion sort of on a daily basis right now. And so what I think is challenging is right now those firms are allocating to low risk securities, right? So T bills, strips, bonds, etc. That's a small percent of their portfolio. They have cash, money market stuff. They have traditional equities. They have real estate. And then maybe 15% of their portfolio is in higher risk assets that focus on early stage capital formation to growth stage capital formation. So that's growth equity and PE, it's hedge funds, and it's venture. And so as we look at that, where do crypto assets fit in? Monetary instruments, probably the closest analog to something like a Bitcoin, right?
Yep.
So that's more like your money market bucket. Real estate, that's probably more like securitized assets, right? So can we securitize assets and make them more flexible? Maybe. Equities, that's more like token offerings that represent equity in privately held companies, right? That kind of displaces that PE bucket. ICOs probably fit more into the VC bucket where it's really early stage ideas getting capitalized. So what I'm trying to think of in the context of an institutional investor is what are those analogs? Because I think there may be new capital that flows in, but likely it's more of a displacement of existing allocations into some of these new asset classes. And I think what's challenging there is you have to frame the narrative in a way where an institutional investor understands what they're buying. It fits into the mental models they have that have been trained, over the last 50 years. And then they also have to be able to hold it, trade it, deal with it, talk about it to their investors in an easy way. And I think that's where the market infrastructure side is a little immature. We've been so focused on the creation and distribution of assets that we really haven't started thinking about the management of assets. So that post-investment life cycle is pretty underdeveloped. And then end of life of an asset, right?
Yep.
So what happens when a token is dead? How do you redeem a token back into cash? What do you get? So there's going to be a lot of experimentation, but I think the slice of the pie that's going to go into cryptocurrencies, true store value cryptocurrencies, ICOs, security tokens, and securitized assets is initially going to be much smaller than we imagined. But then when we start being able to prove that in fact that efficiency, that liquidity, and that sort of usability component that we talk about can actually be realized, once there's proof of that, I think it'll grow much more quickly. But we're not doing a very good job right now.